Good morning, everybody. We'll begin shortly. We're just waiting for a few more people to log into the system. So we'll be with you in a moment. Good morning, everybody. And happy summer. Hope you all survived the heat wave. We are excited to provide you with a lot of valuable information today. I am William Greenalge, and along with me, David Bettino, we will be your hosts for this meeting. Just to begin, next slide, please. A few housekeeping items. This webinar is being recorded. And we will post it out on our website following the meeting. Give us a day or two to clean it up. Attendee mics are muted. Meeting materials will be available on our website. If you need to email the SEAC committee, our email address is right there on the screen. It's calpers_SEAC@calpers.ca.gov. Next slide, please. If you have questions, go ahead and you could type that into the Q&A feature. We also have a function where you can raise your hand, and if we have time, we'll be calling on people so you can propose live questions. Might be easier just to type it into the Q&A function. Okay, next slide, please. Our agenda for today is we're going to start off with Rand Ball, and we're talking about reciprocal self-certification form, followed by completing the annual information request form by Veronica, employment certification by Ryan, my CalPERS employer reports Cognos catalog by Erica. Next slide, please. Take a 10-minute break, followed by off salary schedule pay by Kevin, full-time equivalent pay rate calculator, Truck, retroactive payroll reporting by Carlos, and coaching stipends by Ken Noss. And then we will follow up with questions and answers. With that, I am going to turn it over to our chief, Renee Ostrander. Hi, Renee.
Good morning, everyone. We're so excited to have you, and I'm loving watching the number of participants that are joining us today. So typically we do a quarterly meeting with our county offices of education, and we have a lot of interactive dialogue, and we talk about really specific things. But what we wanted to do today was something a little different. So we know that all of the school districts are the ones that are at the heart of these membership issues and payroll issues. And so what we really wanted to do was connect to all of you and make sure that we were getting, the education out to our districts that they need to be able to do the work that you do daily, understand our rules, and what goes into making sure that when, after decades of working, when someone goes to retire, that CalPERS has what they need to be able to calculate that retirement and provide that lifetime benefit to that individual. So I don't want to take up any more time because I know we have so much content for you, but please, as Bill mentioned, add your questions into the chat. We are going to try to stay on schedule because we have so much training that we wanted to give to you. If we don't get to your question, not to worry, we're going to make sure that we are answering those, and then we'll get those back out. And so with that, Ran, I am going to turn this over to you to get us started.
Thank you so much, Renee. And hello, good Good morning, everybody. My name is Rand Paul, and I am the team leader on the member election team. I'm here today to give you a quick overview of some changes we've made to the reciprocal self-certification form. Assisting me with questions today is one of my amazing team members, Cassandra. During the presentation, please feel free to use the chat function to ask any questions, and Cassandra will do her best to answer your question. If the questions are a little bit more involved or specific, we will be in contact with you following the presentation, and as always, welcome you to reach out to us so we can provide better assistance. Next slide. We will start with a short overview of the Public Employees Pension Reform Act, in case any of you are not familiar with it. The Public Employees Pension Reform Act, otherwise known as PEPRA, went into effect on January 1st, 2013, and it created a new enrollment level of retirement benefits for members who meet the definition of a new member. A member's enrollment level is determined for each new enrollment in CalPERS and can either be PEPRA or Classic, and we will define each of those a little bit later. Essentially, what this means is that every time a member has a new appointment created in My CalPERS after 1/1/2013, an enrollment level determination is made for that appointment. As a result, a member may have all PEPRA enrollments, all Classic enrollments, or a mix of PEPRA and Classic. With the creation of PEPRA also came the necessity for employers to begin utilizing the reciprocal self-certification form. Before we dive deeper on the form requirements, let's cover how the law defines a member who is subject to PEPRA. As defined by PEPRA, a new member includes a member who joins CalPERS prior to January 1st, 2013, who on or after January 1st, 2013 is hired by a different CalPERS employer following a break in service of more than 6 months. It's important to note here that for the purposes of PEPRA, all state of California departments, including California state universities, are considered the same state employer. All school county offices and the districts are considered the same school employer, and each public agency is considered a separate employer. A new member also includes a new hire who joined CalPERS for the first time on or after January 1st, 2013, who has no prior membership in another California public retirement system. A new hire who joins CalPERS for the first time on or after January 1st, 2013, and who is a member of another California public retirement system prior to that date, but who is not subject to reciprocity on the date of enrollment in CalPERS. All appointments that do not fall into the definitions just mentioned are considered Classic enrollments. Next slide. Next slide again. There we go. Sorry. So how exactly do we determine a member's enrollment level, and what are your responsibilities as the employer for this process? An employer is not expected to make an enrollment level determination. If you or the member have questions regarding this, contact CalPERS. However, if your agency as the employer is required to follow certain steps so CalPERS can make the enrollment level determination properly. Your agency is required to utilize the most recent version of the reciprocal self-certification form, which we have updated. You must provide the form to every member who is enrolled in CalPERS on or after 1/1/2013, which should be any member you are creating an appointment for, even if they have previous membership under your agency. A new form is required because the data may have changed. The member is directed on the form to return the form to your agency within 10 business days. Your agency is required to ensure the completed form is returned and follow up with the member if they fail to return the form completed. This form is auditable, and it is expected that you have a form in your employee files for anyone enrolled on or after 1/1/2013. Once the form is received back from the member, your agency should review the form and ensure that it was completed properly. This includes that all form sections are filled in where applicable. reviewing to ensure no CalPERS data was included on the form, and that when a member provides dates for the reciprocal membership, they provided a full date, including month, day, and year. If a member completed the form incorrectly, you must return it to them and request that they complete a new form. To be clear, employers are not required to validate the accuracy of the data on the form, but it is expected that employers help support our members to ensure the instructions are followed for form completion. We also encourage employers to request the member provide substantiating information for the data they indicate on the form to better support the member with completion. The last step of the process for your agency is ensuring the form is processed properly once received from the member. When you enroll the member in MyCalPERS, there is a panel at the bottom of the appointment titled Reciprocity. You must utilize the data the member provided on the form to complete this panel. We will discuss this more later. Keep the completed form in the employee's file for auditing purposes. You will not send the form to CalPERS unless it is one of the unique circumstances noted in the employer reference guide, such as if the member indicated multiple reciprocal retirement systems. Once you save the appointment, MyCalPERS will utilize the data you provided within the appointment, along with any MyCalPERS membership history, to make a determination regarding the member's enrollment level eligibility. It is important employers follow all of these noted steps and contact CalPERS if you need assistance or believe a member is enrolled incorrectly. Failure to follow these steps may result in a member being enrolled incorrectly, causing financial impacts to both your agency and the member. Next slide. There we go. Now we get to move on to the information we are so excited to share with you, the revised reciprocal self-certification form. This form was revised effective July 1st, 2023, based on the feedback from our members as well as our employers. We will cover each section of the form and the changes in more depth in the following slides. But notable changes include that the form was shortened. The format of the form was changed to improve accuracy of the members' responses. We also added a new reciprocal retirement system, City of Delano, to the list of qualifying reciprocal retirement systems. It is important to note here that the expectations for processing the form as an employer, which we just discussed, has not changed, and the information requested from the member has not changed. The member will still provide their reciprocal membership information on the form, but the questions have been revised to solicit more accurate responses. Next slide. Section 1 of the form still requires the member's demographic information, including their name and CalPERS ID. We have added a question that asks if the member is a member of CalPERS with funds on deposit. This information is informational only and will not impact the processing of the form. The question regarding reciprocal membership remains the same and directs the member to continue to Section 2 if they indicate they are a member of one of the retirement systems indicated on the list enclosed with the form, so they can provide their reciprocal membership details. Next slide. Section 2 of the revised form requires the member to provide their reciprocal membership details. The form is now posed in a questionnaire format and walks the member through each element of information you as the employer will need to enroll them. These questions correspond to the fields in the reciprocity panel of the appointment in MyCalPERS. A member will provide the name of their reciprocal system, their membership date, their separation date if they are not active, or their last activity date if a member of STRS. Then they will also indicate if they are retired or refunded from the reciprocal system and provide a date if they are. The form allows a member to provide 2 employment periods in a reciprocal system. If a member has more periods than this, they must complete multiple forms and you may combine the forms together. If a member does indicate multiple reciprocal systems or multiple periods of reciprocal membership, you must send the forms to CalPERS for processing. The reference guide provides details regarding this process. As a reminder, no CalPERS data should be indicated in Section 2 of the form. If a member provides CalPERS data in this section, the form should be returned to them to correct and provide a correctly completed form. Next slide. Section 3 asks the member to review the statement and then sign and date the form. You will notice this is the last section of the form because Section 4, the previous employer certification, has been removed. The data in the employer section was for informational purposes only, and the relevant data has been moved to Section 1, so the member can indicate enrollment eligibility date for your employer. Next slide. We wanted to briefly cover the reciprocity section of the appointment in CalPERS for anyone who is not familiar with it. This is the last section of the appointment when you create or edit an appointment in CalPERS, and will initially give you the question, reciprocal member indicator, with the option to select yes or no. If you select yes, it will expand the section to provide additional fields to input, as you can see in this screenshot. If the member indicates they are a member of a reciprocal system on the reciprocal self-certification form, you will select yes in this panel and then utilize the data provided by the member on the form to complete these sections. If the member indicates they are not a member of a reciprocal system on the reciprocal self-certification form, you can select no and save the appointment. The employer reference guide will walk you through how to complete this step by step if you need assistance. Next slide. With the revision of the form, our resources will also be updated to help your agency and our members complete the form properly. A circular letter will be released soon, which will cover the revisions in more depth, as well as links to all of the resources. We will also be revising our public agency and school reference guide to include the revised information on the form and some clarification regarding processing the form. You may notice that the instructions to the member have been removed from the form itself. They will instead be moved to the PEPRA section of our website with a drop-down for the member to reference instructions for how to complete the reciprocal self-certification form. Members can be directed to the website if they need assistance with completing the form. And of course, you are always welcome to contact CalPERS with questions if you believe a member may be enrolled incorrectly. Next slide. I know that was a lot of information and the agenda is a little tight, but do we have time for live questions, or are we in the chat only?
We do. We have one of the questions that have been coming up most is, will the slides be available? And the answer is yes, we will post the slides on our website. Give us hopefully by the end of the day. Our goal is to try to have them up before the meeting, but with last minute changes, we got delayed.
I see a question from Michelle on where we can find the new form. We're working with our public affairs office to get the new form updated to the website. It's a process making sure that we have all of our updated resources in place, and when the circular letter goes out, it'll have links to the new form as well as the updated reference guides and any other resources that will be beneficial to completing the form.
Excellent.
Well, in the spirit of making sure my colleagues have enough time, please continue to hit us up in the chat for questions, and I'm going to hand it over to the next presenter.
All right. Thank you very much, Rand. Veronica, how are you doing?
Good morning. Good morning from Bakersfield. How are you? I'm Veronica. I'm the team leader from the State Social Security Administrator's Office here at CalPERS. Today, I would like to tell you about the annual information request, which we also is known as the AIR. Next slide, please. So first I'm going to explain to you what is the air, and then, how to locate it on my CalPERS. Also provide you with some additional details of the additional agreements that you can find in your district's profile or your COE's profile. And then lastly, how to complete the air. Next slide, please. So first, let's talk about, of what is the air form? What's the purpose of it? Next slide, please. So the annual information request, the air, is a federal requirement. So the Social Security Administration requires that the state administrator, who that's us, CalPERS is a state administrator on behalf of the whole state of California, reaches out to all public employers on an annual basis and asks tax withholding questions to make sure that employers are withholding tax, Social Security and Medicare taxes properly, that we secure data that tells us how many employers are out there, and their contact information. So that is part of the air. And then also helps us to update our database that we have, for all the public employers in California. Next slide, please. So the air, the annual information request, is completed electronically. The first years we did it by paper, but we have now implemented it, and it's in my CalPERS. We issue them for both the County Office of Education and the school districts in the months of March and April. So they're issued alphabetically by your county's name. So all of the school districts on that particular county will receive them, on that month, that you're with. So we'll start with A and, start March and in April. And then if within 30 days, the annual information request is not completed, then we will send you a little reminder letter, asking you to complete the form. And then we may also contact you via email or telephone calls, either to remind you to complete the form, or if we have questions related to the answers that you provided in the air. Next slide, please. So now let's go over, what's in my CalPERS as it relates to the annual information request and your Section 218 agreement. Next slide, please. So first of all, you have to have the business partner Social Security access role to be able to view the annual information request and any Section 218 agreement related documents, as well as providing us, like, let's say your district changed their name, or there was a district that was created or dissolved. So all of those documents, you can upload, via using the annual air, and of course, completing the air. Next slide, please. So just really quick of how you log in. So, all of you are, I'm sure, know how to get there. So we go to the CalPERS website, and then we click on my CalPERS, as you can see on the red circle, my CalPERS login. Next slide, please. Then you will log in as an employer and business partner. And then once you're in, then you want to click on the home screen in the my CalPERS landing page. And then here we are. So this is the profile that you'll see. This is where you can see in the bottom panel on the contracts and agreements, you can see your Section 218 agreement, your Social Security agreement. So if you have a current one or a terminated one, or if you have Medicare, they will all be located there. And then on your left hand side on the sub-navigation panels, the very last option is the SSA annual information request. So that is where you locate the air to complete. Next slide, please. So again, highlighting all of those, important areas where you can locate your agreements. So if you want to see the agreement, then you want to click on the sub-navigation global tab of agreements. So if you click there, next slide. This is where you locate the annual information request. You click on the annual information request. Next slide. Then you click on the most current date, I'm sorry. It should be hyperlink, blue hyperlink. For the old ones, it goes black, so you cannot click on it anymore once it expires, or it's for the previous year. Next slide. So this is how you complete the annual information for the county offices of education. Next slide, please. So for the county office of education is a two-step process. So first, we're asking you to confirm if there was any organizational changes, meaning, you know, there was, did you have a district that was formed or dissolved, any lapsation, reunification, you know, any of that, one of those changes we would like to know, because we need to contact Social Security Administration to let them know. And then we'll have you complete the school reorganization under the mergers tab. So let me walk you through that really quick. Next slide. So once you click on the annual information request tab, then if you're the county office of education, you will see this screen. So first, we ask that you provide with your federal tax ID number, and then we ask whether or not you have organizational changes. So if you don't, which is the most common questions for the most part, then you click no, and then we ask, you know, if you have any employees, which, you know, all of you should have employees, right? And then we ask you to provide the number of employees for your county office of education. So the number of employees will consist of anyone that work at your COE during the year that you issue a W-2 form for. So regardless of you withhold Social Security or not, so that would include your teachers, your part-time people. So you count all of those W-2s and you put the number there. And then you click submit. Next slide, please. And then once you complete it, then you'll get a green box that tells you, you know, thank you for completing the form. And if you have any questions, it gives you an email address to contact us. Next slide, please. Now, let's say you do have organizational changes. So you would click on yes, so there is organizational changes. And we're asking, you know, do you have any districts that were out of existence during the fiscal year due to dissolution, unification, unionization, you know, or any other reason? So then we ask that you provide the legal documentation. So we're looking for, you know, board meetings, resolutions, you know, that would provide us with the information that we need to ensure that that was the change that occurred. Also, if there was, you know, same thing for there was a new school district that was formed, you know, we would ask that you provide the same information. Again, we share this information with Social Security Administration so they have an accurate list of all of the school districts that are current under each of your county offices of education. So you click submit. Next slide, please. Then it will ask you to submit the documentation. So this is where you would upload the proper, you know, document that tells us about the change that occurred. And then you click submit. And then again, you can view the green box telling you that you're completed. And if you like to verify to make sure that you did include the correct file, you can click on the view response document. That's where you can view your document. If you're not satisfied with the document that you uploaded, or there is more documents to upload, you can click back again on the upload document, and it will let you upload additional documents to us. Okay, next slide. So this is the second step. So we ask that you come over here to the mergers and reorganization sub-global navigation tab, and then click on the current effective date. So you will click on the blue hyperlink date. Next slide. And then again, we ask that you complete the, you know, yes, there was changes, or no, there wasn't any changes. And then we also ask that you review the current list of school districts. So if you see any discrepancies that we need to correct, you know, please contact us so that we can work with you to to, you know, to update those school districts that might be, you know, that maybe name changes or have, you know, dissolve or new districts that you have created. And then, so when you're done with the screen, you click again, submit, and it will show the status as complete. In the event that you did have someone, you know, a district that dissolved, you know, we ask that you contact us, or we will contact you actually with the, by you completing the first part, because it's a little bit more complicated, you know, to complete this screen with choosing the school district that was dissolved and what is it, you know, what is merging to or creating a new school district. So we will, you know, help with that portion if you in fact had a new school district that was dissolved or created. Next slide, please. So now we are asking the school districts to complete the annual information request. So for the school districts, it's a little bit different form. So next slide. So when you click on the annual information request, this is what it's going to look like. So it is interactive. So depending on how you answer it, there will be more boxes that come up, you know, or not. So next slide, please. So first we start with asking you for your tax ID number for your school district. Then, you know, of course, we already know that you offer CalPERS and CalSTRS. So we're asking you if you have any additional, you know, FICA replacement plans that you offer, and we provide you with some examples, you know, that we know that are the most common ones, with like Apple, ICMA, PARS, you know, etc. So if you do offer that in addition to CalPERS and CalSTRS, then we ask that you choose it from the drop-down box. And if you don't see the name, you also have an option of clicking other and then typing in the name of your other retirement system. And then we also ask for the number of employees. Again, it would be all of your employees that work in your school district. That includes your you know, your teachers, your part-time people, temporary people, rehired annuitants, everybody that works there. Next slide, please. And then first we ask for the Social Security and Medicare tax withholdings for your CalPERS members. So here we ask, do you withhold Social Security and Medicare for your CalPERS members? So you tell us yes or no. And then we ask, you know, do you, out of this CalPERS member population, do you have anyone that you exclude? So then you would choose, you know, we'll give you a whole list. If you say yes or no, the whole list of all the possible positions that you could exclude show up there. If none of the positions show up on that list, then you also have an option of typing in the type of position that you exclude from the other and the other box. And then we ask about your employees who were hired prior to April 1st of 1986. We are asking whether or not you withhold Medicare for that group of employees. Next slide, please. And then we do the same thing for your CalSTRS members. So we're asking that you withholding Social Security and Medicare for that group of employees, any exclusions, and then, you know, on the Medicare question. Next slide, please. So here's again for the exclusions. I'm sorry, no, this is for the employees who are not members of CalPERS or CalSTRS. So all those employees who don't qualify for either retirement system. So we're asking, do you withhold Social Security and Medicare for them? So you will tell us yes or no. And again, do you exclude anyone from withholding from that group of employees? And then again, you have the option of clicking any of those positions or telling us the, you know, the name of the position that you are excluding. Okay, next slide. And then when you're done, you'll get that green box at the top that says, thank you for completing the AIR form. And if you have any questions, it gives you the email address that you can contact us at. Next slide, please. So this is the end of my presentation. So we reviewed the AIR form, how to access my CalPERS, then how do you view your Social Security and Medicare agreements, and then how to complete the AIR for your County Office of Education and school districts. So I will take questions now.
Okay, it looks like we have a question from Nancy Chow. Nancy, go ahead. Okay, Ruben, do you have a question? Okay,
So I do
Ms.
see
Doe?
on the screen that the questions are being asked about the charter schools. So we don't ask the annual information request at the school level. So we are asking for the school districts to answer the tax withholding practices on behalf of all the school districts within their in all the schools within their district there. So no, we will not send it to the charter schools.
Okay, looks like that's it. Thank you, Veronica.
All right, thank you. So I hope you guys can join us for our upcoming webinar. We have a couple of them for the rest of the year. We are going to be joining with CalPERS on the webinar on worker classification. So whether or not someone is an employee or independent contractor. So that's coming up next month on August 23rd from 10 to 11. And then at the end of the year, we always like to talk about the windfall elimination provision and the government pension offset. So providing you some tools for, to provide to your employees who are not participating in Social Security. So register for those webinars at our webpage.
All right.
Then that's it.
Thank you very much,
you.
Veronica. Ryan.
All right, good morning, everyone. My name is Ryan Beaker, and I'm the manager of the membership review team. And today I'm going to talk about employer certification. So before I start, what is employment certification? Most typically, you, the employer, is responsible for certifying some information for us. Most typically, it's when we have a member go onto their member self-service accounts and apply for a type of service credit purchase. They submit that information and we get that, and then we ask you, the employer, to certify that time. The most common scenario we see is when a member applies for service prior to membership. So let's say today I qualified for CalPERS membership. My employer brought me into membership as of 7/19/2023. And let's say I worked for City of Sacramento in 2020 as a lifeguard, part-time, seasonal, only working the summers. I can actually go back and buy that time prior to membership, in which case I have to initiate that. I have to log on to my member self-service account, submit that, and then that starts the process. So my team will reach out to you and say, hey, Ryan started working for City of Sacramento as of 2020. Can you fill out this pay information? So I'll get into more details about that employment certification, but the crux of my presentation is really centered on focusing on the data, going over some tips and tricks, things to help you expedite that process. What we tend to see is, it can take up to 90 days to complete a certain process, whether it's arrears or a type of service credit purchase. And most of that time is spent my team specifically going back to your team and saying, hey, what did you mean by this time-based and tenure? We have certain periods that are missing. You did overtime hours here. So a lot of that time frame is going back and forth, trying to get that information. So hopefully this should provide some context of what exactly we're looking for, with the hopes that the data coming in, if it's 100% correct, that helps my team exponentially, move that along. And we should be able to cut those service level agreements in half if that data coming into my CalPERS is 100% accurate. So next slide, please. Today, I just wanted to touch about 5 most common mistakes we see, day in and day out. We see a handful of other mistakes, but these are the ones that cause the biggest issues. So first off, certifying the wrong position. A lot of times we see an employer will certify the information based on my appointment today to certify that time I had with City of Sacramento. Next, we see incorrectly certifying part-time status, and 95% of the time, it's just the employer doesn't understand part-time, right? It might be the case that an employer certifies part-time, but also you might accidentally certify permanent, even if that's not on the original hiring document. In that scenario, they could be brought into membership, and it could be an arrears penalty, which means the employer is responsible for paying employer and member contributions. So understanding what we mean by part-time can help, expedite that process as well, and kind of just look out for those small things. Next, overtime. This is kind of a confusing situation, but basically, if you're not a member, we have to see all those hours worked. So if I work, 60, 70-hour work weeks and I'm just an employee, I'm not a CalPERS membership, you have to report all that time to the certification. The kicker being, once I become a member, now overtime is not reportable per our government codes. And hopefully everybody should know that. And if you don't know that by now, overtime is not reportable as a member. Next, we tend to see missing periods. So especially with our school districts, we understand obviously summer vacation happens. We need to see the full chunk of time from beginning to end. And typically what we see like July and August are missing, and that becomes an incomplete certification. And we have to reach out to you to say, hey, please certify this time. It's definitely okay if that person didn't work during the summer. That being said, you have to report zeros for that time period. So if you're doing a monthly payroll for July and August, let's say, hypothetically, you would just report a zero payroll line. So 0 earnings, 0 hours worked. You would still have to do July and August with those end dates in there and let us know, hey, this person wasn't working. Otherwise, we're assuming either you forgot that data, and when we go to do that check, it's impossible for my team to really pinpoint where the 1,000 hours threshold is coming from because there's 2 months missing within that fiscal year. And lastly, adding service prior to membership time. With membership time, that's a little confusing, but I'll show an example of that at the very end. Basically, we just need to see the certification up until a certain point that they hit membership. And let's say it's a monthly period. So let's say I gain membership on the 27th. You need to report up until the 27th, service prior to membership time, and then my membership time, the 27th to the end of the month, if that makes sense. So next slide, please. So in this screenshot, we have Bruce Wayne working here as an engineer. And in reality, what happened is Bruce Wayne is working as an engineer. He's an intern. I call him in specifically to draw up some different kinds of designs and things like that. He gets our coffee, normal intern type things. But, I have a lot on my plate, so I'm going through the certification. And I know today, as of today's date, the 19th, Bruce Wayne is permanent full-time. So you could kind of see up on that screen the from dates in 2010. I'm just quickly going through the certification. Yeah, the time base is full-time and permanent. Going back to 2010, and I'm speeding along, and yeah, I'll get that payroll information, but this is his time base and tenure as of today. This screen specifically is asking what is the time base and appointment tenure back to 2010, right? When he was an intern. You can see the primary position doesn't list intern. You can see full-time permanent. Based on those standards, this is an arrears situation because you're certifying, hey, he was full-time permanent, which means you automatically qualify for CalPERS membership. And, if today is his membership date and you're certifying back to 2010, that means all that time now becomes the responsibility of the employer. You have to pay the employer contributions and the member, and you can't pass that cost on to the member. So you have to be really careful. Always certify that position what it was originally. Don't use today's information to certify a prior position, if that makes sense. So be on the watch out for that. Next slide, please. This is all the fun government codes that I could cite and read off. I'm not going to do that, but what I'd recommend, go ahead and print this out. And when you're doing the certifications, take the time to slow down and really understand what we're asking in those fields. So they're already a CalPERS member. If they were hired to work full-time more than 6 months, or if they're working regular part-time service, 20 hours, 1 year or longer, all those qualifications means, hey, they should have been brought into membership originally. Whatever date they said, hey, I started working back in 2010, technically all that time would be reportable to CalPERS, right? I included a link there at the bottom. So when this presentation's over and this is posted online, you could open up, page 24 shows what our requirements are. You could print that out and have that ready. Every time you do a certification, just look through those requirements and just make sure you're not going to be in any arrears situation there. So next slide, please. So this is the correct way we should be certifying this person's position, right? So right away, engineering intern. I want to make sure what's listed on that pay schedule is what it was back in 2010. So I could clearly see, hey, this person was an engineering intern. So my staff knows, okay, this is correct, going back to that pay schedule, right? Usually interns aren't going to be full-time members. So it kind of gives my team a little indication that, hey, something might be off if you list an intern and they're permanent full-time, unless your agency is extremely wealthy and you could afford that, awesome. But most interns are excluded on membership, right? Next, the time base worked as needed, as most interns are, and they're seasonal, 8 months. Based on that scenario, if this person is working under 1,000 hours within a fiscal year, there's no way this person can be identified as having arrears. If this is the scenario, my team would just look for the hours. Did they work over that 1,000 hours? No, they did not. They're seasonal. They only work during the summer. And then we send that information over to the service credit team and they go about costing that service credit purchase. So again, always use the information based on the dates of appointment. So in this scenario, 2010 to 2011, I'm going to flip through this person's personnel file and I'm going to use that hiring document to fill in this portion of my CalPERS. I'm not going to use the current information where this person's permanent full-time. Again, I want to be very clear, in this scenario, this person would not have an arrears if working under 1,000 hours within a fiscal year. Next slide. Kind of like a recap, that membership based on time based and tenure. This is all the information. And I'm not saying, an employer doesn't try to get out of paying those arrears, but a lot of times, we understand employers go quickly through those certifications. Larger schools might have, 20, 30 different certifications you got to go through. It's a time intensive process. So again, my recommendation when you're filling out these certifications, understand what the government codes are rules for automatic employment and things of that nature. Again, I'm not saying anybody's cheating the system. I'm just saying a lot of times it's just missed because you have a lot on your plate. So slow down, take the time to understand the basics and really apply that when you're filling in the information on those certifications. Next slide, please. So overtime. As stated previously, my team specifically will review those certifications for the time based and tenure. But the second part of what we do is we look to see if that person worked over 1,000 hours within a fiscal year. A lot of times in those certifications, we find out that an employer is certifying, normal full-time hours. It might be the case, especially with seasonal staff. Somebody calls in sick, that 40-hour work week becomes a 60, 70, 80-hour work week. So all hours until you hit membership has to be reported on that certification. At that point that you hit your member or that 1,000 hours, you become a member, and that overtime is no longer reportable to us. Next slide, please. So here's an example. Member applies for a service prior to membership service credit. Again, like let's say they're a lifeguard or something of that nature. The time period is August 1st through May 1st. The member hits 1,000 hours in January. So up until that point in January, report all hours, regardless if it's full-time, overtime, or whatever the situation is. And within our CSV document, we have a template on our public website. We have a specific spot for overtime. What we tend to see is these certifications come, everybody fills it out. And a lot of times we'll get a call from the member that says, hey, actually, I worked 80 hours this week and I worked 80 hours this week and I have a paycheck to prove it. Then we'd have to go back to the employer that said, hey, why didn't you report overtime hours up until the membership date? So that becomes a lot of back and forth, my staff reaching out to your staff to get that corrected. So just remember, all hours are reportable up until the membership at the point that you cross 1,000 hours. And then any overtime after that point is no longer reportable in that certification. Next slide, please. Next is our missing pay periods. Like I mentioned earlier, we see a lot of instances where you have an employee who's not working during the summer. That's 100% okay. You can see in the first box up above, this is pulled from a CSV document that was recently uploaded. You can see June, and July are completely missing from the top portion of the screen. This is incorrect. My staff can't properly go through that 1,000-hour check to see what happened because there's time missing there. So we have to reach out to your staff, get that correction submitted. Chances are your staff's probably off during the summer, so it prolongs the amount of time my team handles it. And again, we're doing this on behalf of the member, so we want to keep that in mind. Anytime my staff's reaching out, ultimately it's impacting that member, right? We're trying to make those members retirement benefits whole as provided by the government codes. So a lot of back and forth between my staff and your staff. The bottom portion is the correct way to go ahead and certify that. So you don't have to report anything at all in those 0 payroll lines. Everything could be blank. What my staff specifically looks for are the earnings and the hours. As long as those are blank, it doesn't matter if the pay rate's filled out or the scheduled full-time hours per week are filled out, because the only thing we look at are the earnings and the actual hours worked. So if those are 0, this is a complete cycle for this member's pay period when you upload the CSV files. Next slide, please. So this one's slightly confusing here. So adding SPM time, service prior to membership, with actual membership time. I just realized this morning that I pulled screenshots from someone else's account from the scenario. So the scenario here is an employee obtains membership, not on the 15th, but let's say they obtain membership on the 27th. So on the first box there, you can see somebody just certified that entire month, right? That entire month of October. And this is technically incorrect, right? The bottom box shows, hey, I'm going to report that service prior to membership time. That's going to get calculated as that service credit purchase. And then from the 27th through the 31st is actually the membership time. So you have to split that up based on the scenario. And a lot of times my staff will reach out and say, hey, actually this person crossed the 1,000 hours as of the 27th. Go ahead and split that time from the 26th before that time period and the membership time after that time period. So part of that will be eligible for a service credit purchase. Then the other half of that will probably be in arrears in most scenarios. So I think there's some misunderstanding where if we do find an arrears on a member's account, you're responsible for all that time. That's incorrect. You're only responsible for the time that they cross 1,000 hours within a fiscal year. So at the point that they hit membership, you're responsible for that time on the arrears. That member can still buy that time back for service prior to membership. So just keep that in mind. A lot of times you'll have to split that up, and a lot of times it's a phone call from my team member saying, hey, they actually crossed on the 27th, split October up into 2 separate lines. As long as that whole time period is there, perfectly okay. It doesn't matter how many lines you have for October. You could have 31 days if you wanted to for whatever reason, but we need to see the entire chunk of time there. Next slide, please. And this portion, any questions about anything I went over so far?
Let's see here. Let me try a live question. Tiffany Maxwell, go ahead with your question. You can unmute yourself.
It was an accident, I'm sorry.
Hi, Tiffany.
Hi, that was an accident,
Okay,
sorry.
no worries. Erica, do you have a question?
Yes, can you hear me?
Yes, we can.
Okay, I have 2 actually. I had asked this back when they first created the screen. Will you ever be adding like a retroactive service period transaction type so that employers can submit like retro records for retroactive increases?
I know our plan is we're going to periodically be doing a few edits to our arrears process. We want to make it as most streamlined as possible. So I'll send you an email. We've been communicating about other enhancements and things like that. So I'll reach out to you specifically. We get some screenshots and like a scenario if you have someone like a CalPERS ID and like what school district they are.
Mhm.
If you could send that to me and I could add it to our overall list, because we do want to make that functionality just a little bit more streamlined. There's a few, funky things here and there, but we want to make it as streamlined as possible. So
Okay, cool. Yeah, I'll do that. And then I have another question.
sure.
So when we have, and this is in regards to like late enrollments, not
Mhm.
necessarily certifications for like service credit purchases. So when we do the late enrollment, you guys, that triggers a request for an employment certification from CalPERS to the employer. But you guys gave us access a few years ago to report the arrears records. So we go ahead and report the arrears through our payroll reporting, but then the district continues to receive requests for employment certifications. But we've already given you that data, which kind of, I don't know, I feel like you're asking us to do double the work because we already reported it. But then you're asking the district to also report the same thing that we've already reported to you and paid contributions on. Is there any way that like something can be done so that in those scenarios where we already report, like on your end, you would be able to see that we already reported earnings for that time in question, and then it could like disregard the request?
Yeah, I think there's two parts of that. I think on the background, we have like data ownership and things like that. I know you have a couple of unique districts that are like independent reporters. So I think this might be a unique situation where if you would counter that anytime, from now on, please email the membership reporting and just let us know that, hey, I already did this through payroll, because a lot of it's automated now. So there's not a team
Right.
member specifically saying, hey, Erica, do this. It's the system saying, hey, Erica, do this. But if we know that's already coming in, we could cancel it on the back end. But just making sure we have a record of that. So if you want to keep like a Excel document or something like that, or send it when it comes up, that'd be beneficial.
Okay, so we can just let you know, we've already taken care of it, send it to the membership reporting email, and then you guys
Correct.
will like eliminate that request.
Correct. Yeah,
Okay, thank you.
definitely. And on that, I'm going to go ahead. Me and my team member are going to answer some Q&A. So if you have any other questions for us, we'll respond to that in the chats directly. I want to pass it over to Erica Sanchez, who's going to be going over some Cognos reports and the CalPERS system support team.
Thank you, Ryan. Hello, good morning, everybody. My name is Erica Sanchez, and today I will be discussing Cognos reports that are available to you right now. Before we get started, I wanted to introduce myself as the new team leader over the CalPERS system support team. This is my first SEAC presentation, so please be nice. I will have Ryan and Carlos assisting me with questions in the chat, so thank you guys ahead of time. The goal is to highlight a couple of Cognos reports that can be utilized as a tool for our school employers. Please note that you can access the reports that are mentioned in today's presentation through CalPERS, and you may also view our Cognos catalog on the CalPERS public website. I don't have any housekeeping to address, so let's go ahead and get started. Next slide, please. Thank you. All right, let's dive into our first report, the certified members with less than a full year of service credit. This report is important because by law, a certified member is to receive a full service credit for each academic year. CalPERS will notify the certified member in a letter that the service credit was not reported by their employer. This report allows one to check all the certified members on the roster. This letter will automatically be sent to the member, so this is a great report to get ahead of any potential inquiries. A good time to pull this report is at the end of the fiscal year, but you may pull this report at any time. You can run the report and adjust the members as needed and check the report on the following day. The list should grow shorter as the member reaches a full service year and they drop off the list. Failure to provide CalPERS with accurate and timely payroll reporting of any compensation may result in retirement benefits being delayed, or benefits being inaccurately determined, resulting in benefit overpayment or underpayment, a loss of health coverage, etc. Next slide, please. As mentioned earlier, you can navigate to all the reports presented in today's presentation by logging on to My CalPERS. On the left-hand panel, under Common Tasks, you will find the Report tab. From there, you'll be navigated to our Cognos homepage. And on the left-hand panel, you will need to choose Team Content, then PRS Reports ENB 98. Shown on the screen is a sample of the certified members with less than a full year of service credit report. Please note the column in the red box. This column is what displays the member's total service credit. If any of the displayed data shows less than a full year of service credit, those accounts will need to be reviewed for completion. Next slide, please. All right, the next report we will discuss is the reported compensation by calendar year summary and detail report. This report is intended to give employers member earnings across all CalPERS covered employment per calendar year. The report displays participant total reported compensation for a specific calendar year, as well as member earnings from any other additional CalPERS covered employers. Next slide, please. Shown on the screen is a sample of the reported compensation by calendar year summary report. Please note the column with the red box. CalPERS uses the total calendar year compensation to determine if the member has reached the limit. The reported special compensation by business partner column displays payroll that has been reported by your agency. And the total calendar year compensation column will include any compensation from another agency, if any. You can also view the calendar year compensation limit for that particular member in the column all the way to the far right. Please keep in mind that there are different compensation limits between PEPRA, social and non-social members, as well as classic and super classic members. If you are looking for a more detailed breakdown, you will need to click on the participant CalPERS ID hyperlink as shown on the slide. Next slide, please. Here we have the reported compensation by calendar year detail report. This is where you will find a more detailed breakdown of the members' reported compensation if more research is needed. Next slide, please. All right, the last report we will discuss is the out-of-class employer detail report. Once a year at the end of June, employers are notified to report their out-of-class hours for the past fiscal year to CalPERS. This report enables CalPERS or business partners to view out-of-class records reported. You may have already received this letter in the mail. Next slide, please. All right, and here we have a snippet of the out-of-class employer detail report. Please note the column with the red box. This column displays the total out-of-class hours worked in any out-of-class position. As an employer, you can check and ensure that any out-of-class positions do not exceed the 960-hour limit to avoid any administrative fees. Next slide, please. That was a short and sweet presentation. Does anyone have any questions for me? I'll go ahead and turn the floor over to you.
Okay, thank you very much, Erica. Let's see here. Okay, let's go ahead and take a break, and we will return back at 10:20. Sound good? Okay, everybody, we'll be on break until 10:20. Thank you. Hello, everybody, and welcome back. Kevin, are you ready?
I'm ready. Okay, my name is Kevin Fine, and I'm a team leader in the Audit, Compliance, and Resolution Unit. Today, we're going to talk about off-salary schedule pay. Next slide, please. Okay, off-salary schedule pay is an item of special compensation available for classic members only. It's defined under the California Code of Regulations 571. And what it is, in a nutshell, is compensation districts can pay employees in lieu of a pay raise. Next slide, please. All right, in regard to OSSP, PEPR members are not eligible for OSSP. You can certainly pay them OSSP, but it cannot be reported to CalPERS for retirement purposes. All right, next slide. Okay, let's break down the definition of OSSP. So first off, it needs to be compensation for a group or a class, not for an individual employee. Next slide. Okay, there cannot be a COLA or a general pay raise in the same year OSSP is awarded. However, any employees who receive just a basic pay increase, like a step increase based on a salary schedule or a merit increases, are not disqualified from receiving OSSP. We're really talking about a general pay raise or a COLA, something like that. Okay, next slide. Okay, next thing about OSSP. It has to be negotiated through collective bargaining. And basically the term, really most importantly, the terms and conditions for OSSP must be spelled out in an MOU or a labor agreement. I'll repeat that. It needs to be spelled out very clearly in an MOU and or a labor agreement or policy. All right, next slide. Okay, how to accurately report OSSP to CalPERS. First and foremost, and like most special compensations, it needs to be reported as earned, not as a lump sum. All right, next slide. So the issue is if you report OSSP to CalPERS as a lump sum, that can lead to problems down the road for the districts and its retirees. For example, it can cause delays in retirement payments, potential audit findings, overpayments, and worst case scenario lawsuits. So it's very important not to report it as a lump sum, but to break it down over 12 months. All right, next slide. Okay, last thing, OSSP cannot exceed 6%. You can pay your employees more, but only 6% can be reported to CalPERS for retirement purposes. Per this example in this table above, OSSP has been broken down into equal monthly amounts. The correct amount in this particular scenario is $240 a month, which is 6%. Now the district can pay the extra 2%, which in this case would be $80, but that $80 would not be reportable to CalPERS for retirement purposes. All right, next slide. If you have any questions about this, we have a lot of good resources on our website. There's the Public Employee Retirement Law. There's the Public Agency and School Reference Guide. There's circular letters, and I believe we're writing a new circular letter about OSSP that should be available very shortly. And then on the website, there's a compliance and compensation reporting webpage that has a lot of really good resources as well. And then lastly, you can always email our MOU mailbox. We'd be happy to review any MOUs or labor agreements and any questions you might have to ensure that OSSP is reported correctly and that it's compliant with the PEARL. Next slide. All right, told you to be short and sweet. Any questions?
I do not see any questions in the Q&A.
All right, I guess OSSP must be very popular.
All right, thank you very much, Kevin. Truck, full-time equivalent pay rate calculator. You're up.
Thank you. Hi, everybody. My name is Truck Wynn. I am the team leader over the Audit Compliance and Resolution Unit 2. Kevin, who just presented, he's in the Audit Compliance Resolution Unit 1. So we're both on the same team. Today, I will be discussing our newly created full-time equivalent pay rate calculator. This was just launched as of last month on our webpage. So I'll go over a little bit in detail of what it is, our government codes that regulate it, and then go over an example for you and answer any questions you may have. Next slide, please. Full-time equivalent pay rate. So pursuant to Government Code 20636, classified school members pay rate means normal monthly pay for services rendered under full-time. This is during normal work hours, and full-time employment is 40 hours a week, and payments for services rendered should not exceed 40 hours. And this is to be reported to CalPERS. Next slide, please. A full-time pay rate must be reported for classified school members, and full-time pay rate is based on 8 hours a day, that's a full-time equivalent, or 40 hours a week, which is 8 hours a day times 5 days a week. On average, per month, it's 173.333 hours per month. And how that number came out is 12 months a year, or 2,080 hours per year. Divided by 12 months per year. So 2,080 hours is equivalent to 40 hours a week times 52 weeks per year. And it is also based on 260 days a year, which the breakdown of that is 2,080 hours per year times 8 hours a day. So, or divided by 8 hours a day. So if you take 8 hours a day and times it by 260 days a year, you'll get 2,080 hours. Next slide, please. And then here we'll go into service credit and how what it's based on, and this ties into the full-time equivalent pay rate. So full-time service credit, which is a year of service credit for school members, is that it's based on either 10 months in a year if you're a monthly employee, 215 days if you're a daily employee, and 1,720 hours if you are an hourly employee. And how we arrive at service credit is we take earnings divided by pay rate, and that's the formula we get for service credit. Next slide, please. So here we'll discuss our most common errors and what happens when you report incorrect pay rate reporting. So first, inaccurate service credit accruals. So commonly we see, employers don't report on 40 hours a week, or they'll report it based on earnings as pay rate, and that is, provides a inaccurate service credit. And then next, another error is it will cause an incorrect final compensation. And then this also results in a miscalculated retirement benefit. So this could lead to a retiree paying an overpayment or receiving a lesser payment, so an inaccurate benefit. And then lastly, but not least, this creates an unfunded liability and risk to the pension fund. So, the more errors, the more incorrect reporting, this could lead to an increase in employer contribution rates. So that's a huge risk there. Next slide, please. So here we will go over an example, and this example is also on our website, and I'll discuss how to get there in a bit. So in this example, this is we have a 37.5 hours employee who earns $5,000 a month, works 10 hours or 10 months a year, works 205 days a year, and they work 7.5 hours. So their hours per week is 37.5 hours. So that's 7.5 hours times 5 days, and that's the 37.5 hour. So this is kind of like the background of this example employee here. Next slide, please. So here is how we calculate the breakdown to getting the full-time equivalent. So earlier, you saw that this employee works 7.5 hours and 205 days a year. So to get the total hours work, we multiply those two, and that gives you 1,537 and a half hours. And then what we do next is we take the monthly pay rate, which was 5,000, times it by the total month's work, and we get an annual earnings of 50,000. And then we take the annual earnings, which is the 50,000, divided by the total hours work that we arrived at earlier, which is 1,537 hours and a half hours. And that's where we get the true hourly pay rate, which is $32.52. This hourly pay rate is what we use and what should be reported to CalPERS. And this would calculate any dock time, any overtime. This is the true hourly pay rate that we would base the full-time equivalent pay rate on. Next slide, please. Okay, so here's how this converts up to the full-time equivalent. So previously, if you were reporting, based on 7.5 hours, this is how, when we arrive at the true hourly pay rate of $32.52, and we times it by 8 hours a day, the new daily pay rate would be $260.16. The new monthly pay rate would be $5,636.80. And the annual earnings or annual pay rate would be $67,641.60. So here, you can report hourly, daily, or monthly, and this would be the true daily, hourly, or monthly pay rate that would be reported to CalPERS. Next slide, please. So what happens if you misreport a full-time equivalent pay rate? As we stated earlier, commonly we see school employers report pay rate that's not based on 40 hours a week, and this can have an inaccurate service credit. So here we look at the monthly earnings. The previous way that employers would report would be 5,000, and then they divide it by the monthly pay rate, and they get a monthly service credit of 1, so a full-time service credit. But in actuality, or before we go into actuality, we'll go over this calculation. And so in this incorrect reporting, the member gets 1 service credit per year. And based on this example, we just use a hypothetical of a member working 20 years of service with a benefit factor of 2%. So in this case, if this member worked 20 years, at 5,000 a month at the earnings pay rate, the final compensation would be 40%. So their monthly unmodified allowance would be $2,000 based on this incorrect reporting. Next slide, please. So the correct way to report is taking the monthly earnings. So again, we don't, however you pay, you can pay the member based on the 37.5 hours, but how you report, it should be on a full-time equivalent. So 5,000 would be reported as the monthly earnings. The new monthly pay rate that we arrived earlier would be $5,636.80. And we get to a service credit of 0.89. And using that same scenario of 20 years of service times a 2% benefit factor, the actual percent of final compensation would be 35.60%. So in this correct way of reporting, this member would be earning an unmodified allowance of $2,006.70 per month. Next slide, please. So here's the retirement allowance difference of when you misreport or you report the incorrect full-time equivalent versus the correct full-time equivalent. As you can see, the final compensation on the incorrect full-time equivalent would be $5,000. Their monthly allowance would be $2,000, and that's based on 20 years of service, that hypothetical that we provided. And by reporting it correctly, their final compensation would be $5,636.80, and the new monthly allowance is $2,006.70. So you see the difference is in the final compensation is $636, and the monthly allowance would be $6.70. Next slide, please. So as I mentioned earlier, we just launched the new full-time equivalent calculator on our website. So at the, if you go on to www.calpers.ca.gov, and the quickest way to get to our webpage would be to type compliance into the search bar. And this will bring up our compliance and compensation reporting webpage. And this has our circular letters, our special compensation matrix table, and it also has this new full-time equivalent calculator. Next slide, please. And here is our webpage. So down below, in the middle of the page, you'll see the calculate full-time equivalent pay rate for classified school members. That's the calculator. It's used similar to how members, when they submit their estimate request or the estimate calculator on the retirement benefit, it's the same logical concept. Here we incorporated how to calculate a full-time equivalent pay rate. Next slide, please. And this is just getting you to, once you click on that link, this goes over, defining school pay rates for school employees, how to calculate the full-time equivalent pay rate. And then at the bottom, once you click on the full-time equivalent calculator, it gets you onto our next page, kind of like our disclaimer. Next slide, please. And this is our term of use disclaimer that, as you should be inputting the exact monthly earnings, hours per week, months per year, and days worked to get a true and accurate calculation. So any variation that is different or from that variation could cause an incorrect calculation. So this calculator is basically stating that, once you accept and move on, that you're entering the right data. We're giving you this tool as a resource for a estimate or calculation, but if you have any questions, if you're doing it correctly, or if it's the right amount, feel free to email us or call us. Next slide, please. And here, this brings you to the calculator. This is the example that we had earlier, where the monthly earnings was $5,000 a month. They work 7.5 hours per day. They work 10 months per year and 205 days per year. So you have all that incorrect information, and you hit calculate. It will, calculate what the daily, hourly, and annual earnings should be. So next slide, please. And here we go. This is what it, the calculator spits out for you, which is if you're reporting a monthly, this is what the monthly should be. If you're reporting a daily, this is what it should be. And the hourly is what this should be. So it gives you all three how to report. So again, as I stated earlier, you can report daily, monthly, or hourly, but it just has to be based on a full-time equivalent. Next slide, please. So here's our resources. Our webpage, as I mentioned, is calpers.ca.gov. Here we have the Public Employees Retirement Law. We have the Public Agency and Schools Reference Guide, which will also be updated. Our circular letters are all here. We are currently in the process of updating, I believe, 3 circular letters. So that should be updated pretty soon. And then our webpage is the compliance and compensation reporting webpage. So If you have any questions, I know that the full-time equivalent pay rate can be a pretty confusing topic, but feel free to give us, email us at mou_review@calpers.ca.gov, or you can call us at our 888 CalPERS, and that can be directed to us accordingly. So I hope I made sense, and I hope you guys learned something today. But again, feel free to email us, and we'll try to answer all your questions. And next slide, please. All right, so I'll open it to some questions, but if we don't get to your questions, or if your questions are more detailed specific, we'll answer it offline or in the Q&A, or again, you can email us at the mou_review@calpers.ca.gov. Okay.
All right, thank you, Chuck. Carlos, retroactive payroll reporting.
All right, good morning, everyone. My name is Carlos Velasquez. I am the team leader over our payroll reporting and analysis unit, and I am here today to talk about retroactive payroll reporting. Next slide, please. So let's begin by quickly going over the transaction types that you are allowed to report when reporting payroll to CalPERS. So for contributory members, or members that you have withhold CalPERS deductions for, you're allowed to report an earned period reporting transaction, an EPR, a prior period adjustment transaction, a PPA, a retroactive salary adjustment, an RSA, or a retroactive special compensation adjustment, an RSC. For your non-contributory members, such as retired annuitants or members who have been deemed overtime with your agency, you can report an earned period no contribution, no service, which we refer to as an EPN, a prior period no contribution and no service, which is a PPN, and you can also report a retroactive salary adjustment, an RSA. So next slide, please. Before we begin talking about retros and retro reporting, let's first talk about reporting members' regular payroll information. So to report a member's regular monthly earnings in the monthly earned period report, you're going to use the earned period reporting transaction, or the EPR transaction. And on this EPR transaction, you're going to have to include the pay rate, the earnings, the scheduled full-time hours or days per week, special compensation if applicable, and contributions. Next slide, please. One thing to note is that the earned period reporting transaction can only be reported in the corresponding earned period report. You can't use the earned period report in any other, or the earned period reporting transaction in any other type of report. And then the same rules that we just discussed for the EPR transactions are the same rules for the EPN transactions. The only difference is that on the EPNs, instead of reporting contributions, you would report the total hours worked. So let's move on and talk about our first adjustment transaction, which is the PPA. Next slide, please. So the PPA transaction is used to report payroll information for a previous earned period or to correct previously reported payroll information. These prior period adjustment transactions will require you to report the pay rate, the earnings, the scheduled full-time hours or days per week, special compensation if applicable, and contributions. And one thing to note is while these are considered adjustments, we do not consider PPA transactions retros. Next slide, please. These PPA transactions can be reported in the regular earned period report to adjust prior earned periods, or they can be reported in an adjustment report. And they must be reported earned period by earned period. Unfortunately, prior period adjustments cannot span over multiple periods. They do need to be broken out and reported individually. Next slide, please. So if you're using a PPA transaction to reverse previously reported payroll or to modify previously reported payroll, you want to make sure that your PPA transaction is an exact match to what's already posted in MyCalPERS. If it's not an exact match, you may receive error messages, including the CRB 26, which will tell you your negative transaction may cause a negative adjustment on the member's account. So if you see this error message, or to avoid the error message, on your PPA, you want to make sure that you mirror the dates, the pay rate type, the pay rate, the scheduled hours or days per week, and the contribution type of the record you're trying to reverse or adjust. And all of these rules we just covered for PPAs are the same for PPN transactions. That's a typo, sorry, that's an PPN, not an EPN. The only difference between these rules and the PPN is that, again, instead of reporting contributions, you're going to report the total hours worked. Next slide, please. So let's start by talking about the first type of retro reporting that CalPERS allows, which is the retro salary adjustment or retroactive salary adjustment. This RSA transaction is used to report a pay rate increase for a member. And when reporting the RSA transaction, you'll want to include the dates, the pay rate type, the pay rate, the earnings, the scheduled full-time hours or days per week, and the contributions. Next slide, please. RSA transactions can be included in your regular earned period report or in an adjustment report. And they can be reported earned period by earned period, or you can use them to report over a span of time, not to cross a fiscal year. One thing to note, if reporting over a span of time, the pay rate and earnings already posted to the member's account should be consistent and the same for all earned periods. If the earnings or the pay rates fluctuate for each pay period, you should report individual RSA transactions for each pay period as well. The other thing to know about RSA transactions is they do not accrue service credit in CalPERS. So let's talk about some common errors we see when we see RSAs reported and how to resolve them. Next slide, please. So the first common error we see when RSAs are reported is the CRB 105. This error code reads, there's a missing payroll record during the retroactive adjustment period. So if you receive this error, it means that a regular payroll record has not yet been posted to the member's account for one or all of the earned periods for the dates defined on your retro salary adjustment. To clear the error, you're going to want to either post the regular EPR record or go back and report a PPA transaction with the member's regular payroll earnings. Once you do that, you can go back to your retro, revalidate it, and the error should clear. Next slide, please. The second common error we see when retros are reported is the CRB 123. This error message reads, the pay rate in the retroactive salary adjustment cannot be less than or equal to the pay rate reported in the earned period record. If you receive this error, it means that the pay rate reported on your RSA transaction is either less than or equal to a pay rate that's already been reported and posted to the member's account for the dates on your retro. To clear this error, you're going to want to go review the member's posted payroll in CalPERS for the time frame in question, and either correct the pay rate on the retro salary adjustment record if you're truly trying to report a pay rate increase, or change the transaction type on the record to a PPA if you're truly just reporting additional earnings. Next slide, please. The last common error we see is the CRB 274. This error message reads, the reported earnings exceed the maximum allowable earnings for the reported time period. Please verify and update your entry. If you receive this error, it means that earnings reported are more than the expected amount based off the payroll that's already posted for the member. To clear the error, you're going to want to review the posted payroll for the time frame in question, to determine if the earnings that are reported on the RSA record are the true difference between the posted pay rate and the pay rate that's on your RSA record. Next slide, please. If you confirm the earnings are correct and you're still receiving the error, you'll want to reach out to your assigned payroll analyst here at CalPERS, and we can review and then help you with posting those records. Now, please note that if you're reporting a mid-month pay rate increase, or if you had a member who began in the middle of an earned period, for example, we see it commonly in August, they may have only worked from the 14th through the 31st, you may receive an error on your RSA record for the month of August. If that's the case, please reach out to your payroll analyst and we can assist you with posting those records. Next slide, please. All right, we're going to talk now about the second type of retro transaction that CalPERS allows you to report, which is the retroactive special compensation adjustment, or the RSC transaction. So this transaction is used only to report special compensation. And when reporting an RSC transaction, you'll want to include the dates, the scheduled full-time hours or days per week, the special compensation category, the special compensation type, and the special compensation amount, in addition to any contributions. Next slide, please. The RSC transactions can be reported in the regular earned period report or in an adjustment report. They, like the retro salary adjustments, can also be reported earned period by earned period or over a span of time. And they also do not accrue service credit. So now let's talk about some common errors we see when RSCs are reported. Next slide, please. The first common error we see on RSC records is CRB 133, which reads, earnings cannot be reported with a transaction type of retro special compensation adjustment. Remove the earnings from this transaction or report the payroll with a transaction type of retroactive salary adjustment. So if you receive this error, it means that on your RSC record, you have earnings reported in the reportable earnings field. Because RSCs are used to only report special compensation, you'll have to remove those earnings from that RSC record. And if they truly are special compensation earnings, you'll want to report them in the special compensation section. Or if they're just members' regular earnings, you'll want to report them in a PPA, a transaction, or if they're pay raise, you'll want to report them on RSA. Next slide, please. The second common error we see on RSCs is the CRB 273, which reads the pay rate type and pay rate cannot be reported with the transaction type of retroactive special compensation adjustment. Please remove the pay rate type and pay rate from this transaction. If you receive this error, it means that the pay rate and the pay rate type is reported on the RSC transaction. To clear the error, you'll want to change the pay rate type to blank and report the pay rate as 0. The system now requires all RSC transactions to be reported without a pay rate and without a pay rate type. Next slide, please. The last common error we see on RSC transactions is the CRB 357, which reads the special compensation amount exceeds the allowable limit for the identified special compensation type. If you receive this error, it means the amount of special compensation being reported is greater than what the system defines as normal, and it needs to be reviewed by CalPERS to ensure the lump sum amounts are not being reported. So to clear this error, you'll first want to review the special compensation and make sure that you're reporting it as earned. So that may mean to change the dates over multiple earned periods or to change the amount of special comp being reported. If you confirmed that all of the special compensation on the record is correct, then you'll want to email a copy of the member's MOU or labor agreement that defines the special compensation being reported to your payroll analyst for further assistance reviewing and clearing the error. Next slide, please. I want to quickly talk about the future of RSC reporting because we are currently working on some enhancements to hopefully make RSC reporting easier for you. What these enhancements will do, they will allow RSCs to be reported in earned period reports for the current earned period, which means for the current earned period, you wouldn't have to combine your regular payroll and your special compensation. They can be reported as 2 separate transactions. Normal RSC rules that we just covered will still apply to these transactions, and we are expecting this enhancement to be implemented sometime in mid-August, but we'll notify you via my message and my CalPERS once the enhancements are in. Once the enhancements are in, you can also refer to our data elements definitions document in the technical toolkit in case you need to work with your developers to change any of your programming in your payroll softwares. That is the last of my presentation. So next slide, and I will be available for any questions.
Hi, Carlos. We have a question from Heather. Heather,
Sure.
Go ahead, ask your question. Ms. Rockwell, do you have a question? Okay, I think we lost them. Sorry, Carlos.
That's okay.
Okay, we can move on. Coaching stipends, Ken.
Good morning, everybody. My name's Ken Noss, and I am the section leader for the audit compliance and resolution units. You already heard from our team leaders, Truck and Kevin, today. They presented on OSSP and the new full-time equivalent pay rate calculator. And I want to thank everybody for all their great questions. I think we got everything. I just wanted to throw one thing out there. If you have some in-depth questions, we probably are steering you towards our MOU review team to answer those. Our MOU review team is always available to answer any of your reportable compensation questions. MOU_review@calpers.ca.gov. Now, coaching stipends. We've been getting quite a few inquiries about coaching stipends, both from our compensation compliance and reporting units, and then our audit compliance and resolution units and payroll. So we thought we'd address this. I know we've had this in at least 6 other SEACs, but I thought it'd be a good idea to go over coaching stipends and really kind of dive into some of the government code and regulations that determines whether or not coaching salaries are reported to CalPERS. Next slide, please. All right, so stipends. Government codes 20636.1, 7522.34, and then California Code of Regulations 570.5, 571, and 5715. They all determine what is compensation that can be reported to CalPERS. And stipends are not reportable compensation. Next slide, please. So as far as compensation that's reportable to PERS, again, I spoke briefly about 206.361, specifically for classified school members, and then 7522.34. That's going to be your PEPRA members. The reportable compensation has to meet the definitions of compensation earnable, that's for your classic, and then your pensionable compensation, which is for your PEPRA members. Next slide, please. All right, for classic members, we're really going into 206.36.1, CCR 5705, and 571. So compensation earnable is broken down in 206.36.1. It gives you the specific definition of what a pay rate is and what special compensation is. And then compensation earnable pay rates are also limited to the amounts listed on the publicly available pay schedules, the PAPs, in California Code of Regulations 570.5. Reportable special compensation items are all listed out in CCR 571. Next slide, please. All right. For PEPRA members, we call this pensionable compensation, which I know all of you are familiar with. Again, the pay rates have to be pursuant to a publicly available pay schedule, and they must meet the definition of pensionable compensation. And then pensionable compensation is further defined in CCR 571.1. That CCR includes a list of items similar to the special compensation items in 571, but not exactly the same. And those items are other than pay rate that meet the criteria of pensionable compensation. Next slide, please. So coaching stipends, generally they are not reportable. And the reasons for that is because they're not tied to a full-time pay rate. They're not an item of special compensation listed in CCR 571. And they're not an item of pensionable compensation listed in CCR 5711. So that's the reason for the long-winded explanation into the government codes. I had noticed in previous presentations, we really didn't get into that. I'm hoping that this clears up some of the confusion and some of the questions we've been getting on these. Next slide, please. So coaching stipends, again, are not reportable if the coaching position is not listed on a publicly available pay schedule with a full-time pay rate. And the coaching position is listed on a publicly available pay schedule with the appropriate full-time pay rate, but the person is already a member in a full-time position. Again, if the person has a full-time position, classified member, and then they have, this coaching position, even if it's listed, that's considered overtime, that would not be reportable to CalPERS. Next slide, please. I'm going to make a differentiation, go away from stipends a little bit and actually say coaching compensation, what's reportable. So you have a part-time member, they perform the services of a coach, the position and the full-time pay rate are established, they're listed on a publicly available pay schedule. And then the aggregate hours for all positions can't exceed 40 hours per week. So let's say they have a part-time position, 20 hours per week, and then the coaching position is listed as a 20-hour a week. That's 40 hours per week. Anything over 40 hours per week, again, is an overtime, considered overtime, is not reportable to CalPERS. Next slide, please. So we came up with a couple example scenarios. Hopefully this kind of simplifies this a little bit. Next slide, please. So scenario one, you have a member who's working in a full-time position. The member is also employed as a coach. The position is listed on a publicly available pay schedule. Is this reportable to CalPERS? Next slide, please. No, the compensation is not reportable to CalPERS. Again, the member's working in a full-time position. The coaching position and compensation are overtime and not reportable to CalPERS. Next slide, please. So our second scenario, you have a member who's working in a part-time position. The member is also employed as a coach. The position is listed on a publicly available pay schedule. Is this reportable to CalPERS? Next slide, please. So in this situation, yes, the compensation is reportable, but only until the member reaches full-time service credit in each service period. Again, 40 hours. Next slide, please. All right, this should be the last scenario here. So the member's working in a part-time position. The member is also employed as a coach. The position and full-time pay rate are not listed on a publicly available pay schedule. So in other words, the member is given a certain amount of money for being a coach for a season, say, a volleyball coach. Is this reportable to CalPERS? Next slide, please. No, the compensation is not reportable. The coaching position is considered a stipend. And again, coaching stipends or stipends are not listed as items of pensionable compensation in CCR 571.1, and they are not listed as items of special compensation in CCR 571. Next slide, please. As far as resources go, it would be really helpful if you have questions about coaching stipends, try to funnel those questions to our MOU review team. Again, it's MOU_review@calpers.ca.gov. I know there's other areas that can answer a lot of those questions. And if our compensation compliance review units are asking you about this specifically related to a member who is retiring, obviously answer their questions. But if you specifically have inquiries about whether or not this is reportable to CalPERS, please reach out to our MOU review team. That's what we're here for. We're here to help you guys through those processes. A lot of times when you reach out to other units, those inquiries are going to end up coming to us anyway. I don't think you'd get conflicting information, but it's just good to get it from that one source. That's, again, what we're here for. It's probably going to come to us anyway. Also, our website, great resource, calpers.ca.gov. We've got the Public Employees Retirement Law. We've got public agency and school reference guides that are on our website. A circular letter 200-049-19. Great circular letter. It actually addresses the coaching stipends. You can get that on our website as well. And then, of course, Truck went over the full-time equivalent pay rate calculator that we came up with, but we have our compliance and compensation reporting webpage, which is where that calculator is located. It has a lot of great information on there. It'll actually answer, most of the questions you probably have about compensation that's reportable to CalPERS. I would really encourage all of you to use that as a resource, bookmark it, go to it when you have questions, especially if you need a quick answer. It's probably on there. And of course, you can also call us. Next slide, please. Any questions? We good, Bill?
We're good. Thank you very much, Ken.
All right, thank you.
Oh, we just had a whole bunch of hands raised. Ramona, go ahead. Would you like to ask your question? And you're okay
Yes.
to
So I'm going to verbalize the question that I had put into the Q&A. If there is a full-time pay rate associated to that coaching stipend listed on a salary schedule, but it's truly not being paid time-based, like by the hour, it's just an amount, but they have equated, this is what it would be if this person were to do it full-time.
Mhm.
Because it's not truly time-based. That's not reportable, correct?
So you're saying this is on a publicly available pay schedule. It's being given a full-time pay rate. And it's not being paid the way it's listed on a publicly available pay schedule?
So they've put a full-time pay rate that for if somebody was to do this, it's based on column 1, step 1 of a certificated salary schedule. I'm just gonna go with football coach.
Uh-huh.
And so there's an annual pay rate associated to this position. Whether they work 1 hour or 100 hours, they get whatever the coaching stipend amount is. It's not being paid time-based.
Mm-hmm. Yeah, I'd want to see that salary schedule, and if there's any type of labor agreement that's associated with that and how they're being paid, I'd want to see that as well.
Okay.
Okay. Tina, do you have you want to ask your question?
Yes, can you hear me?
Yes, we
Yes.
Okay. So I have a question about, like a retiree, go back to work. But the position is just a walk-on coach. This the pay is not on the salary schedule. So the first question is, do we need to create, if that person come back to work, so 180-day need before that person come back to work, 180-day separation. Second question is,
So are you talking about a retired annuitant position?
correct. So for that position, is that 180-day separation apply for the retiree before they go back to work? Second question is, if because for me the position is not reportable, so do we need to create a retiree annuitant?
Do we have somebody from our membership team still listening in that could possibly answer that question?
Hi, Ken. Yeah, this is Christina. So first, the first part of that question, Tina, the position, if there's a coaching position, it should be on the salary schedule if there is a position at the school, regardless if it is whether we're receiving a stipend or a salary. So that should be listed on your pay schedule. If they're receiving a stipend, just a flat amount, then it does not have to be reported as a retired annuitant. But it should be, again, listed on your salary, your pay schedule. As far as the 180 day wait period, if it's a stipend they're getting and they're coming back, they don't need to wait the 180 days.
Okay, got it. So for that case, if they don't have to wait 180 days to come back, and the earning like the stipend is not reportable to CalPERS, so we don't have to create the retiree annuitant. Is that correct?
Right, but I would also have, it's a good idea to reach out to us before, so we can look at that stipend, see what it is, and just to make sure that it's not compensation that should be maybe reported as a retired annuitant. So I would send that to us ahead of time as well.
I got it. Thank you so
Okay,
much.
you're
Thank
welcome.
you.
Thanks, Christina.
Okay. Tamara, you have a question? Go ahead and unmute your microphone and ask away. Okay, that looks like it's all the questions. Thank you.
Great. Thank you all.
All right. Thank you, everybody. That concludes the presentation portion. Now we have, we're going to open this up for questions. Renee, are you there?
Hi.
Hi, Christina.
Yes.
Hi, Renee.
We are here. And there's Diane as well. We just wanted to open it up. Typically, this is what we do at the end of this quarterly meeting with the School Employer Advisory Committee. We open it up for questions or any kind of issues, understanding if it's something very specific we're probably just going to ask you to send us some information so we can look at it. But certainly we want to provide you the opportunity for any kind of follow-up. The other thing I wanted to do, so many of you that are regular attendees of our SEAC meeting quarterly, you know Brad Hansen quite well. As we mentioned last time, Brad has moved into another area of the organization. He's actually part of our formalized training group. I think some of his team is even online listening today. But what I wanted to share is that we have completed the recruitment for his replacement, and his replacement is Diane Cooper. And so she's joining us there on camera today. You can see her. We're super excited to have her. She comes to us from the Department of Insurance, and she has just a wealth of background in terms of working with statutes and California Code of Regulations. So while her background isn't specifically in retirement, she's very accustomed to working in our type of environment in relation to interpreting statutes and applying regulations. So, and she's very quickly getting up to speed. We're super excited to have her. And with that, Bill, I can't see hands up, so I'm going to leave it to you to let us know if there are any questions.
Okay, Ramona, you want to ask your question?
Yes, please. So I was just wanting to see if there is an update on where things are at on the limited term for retired annuitants, where it's at in the process now.
So for limited duration, I believe it was in June, our CEO shared at our board's meeting that the regulation, so there's a very defined process for regulations. And once the regulations are first advertised, it's required to be at the Office of Administrative Law. It's required to be back to them after the first publication, has to be back to them within a year. And obviously, because we did multiple rounds of publication advertisement for the public feedback, having to go to the board and have the language approved, that all eats up time. And so unfortunately, we just ran out of runway, just trying to make sure that we got sufficient feedback from all of our stakeholders. So, so that it has officially died. However, she was very clear. It's currently with the Department of Finance. So the intention is to address any concerns the Department of Finance has, along with CalHR, get those approvals, and then bring it back and start the process again with the Office of Administrative Law. It won't require us to do new public notice items. We'll be able to pull those forward from the last round, but we do have to reinitiate the process with them. And so as soon as we reinitiate that process, it will start a new one-year clock. So I know we had talked about, there was some optimism to hit, July 1. Clearly that didn't happen. It obviously won't be October. I was thinking that was more realistic. But with us having to resubmit it to the Office of Administrative Law, I would suspect that we are looking at sometime mid next year. So the delay is about a year, I would guess, just an educated guess on my part.
Okay, Hector, do you have a question? Go ahead. Okay, let's go to Erica. Erica?
Hi, good morning. I wanted to ask something because I know a lot of our school district employees are on the line, and we've received a lot of questions about taking salary schedules for board approval. And I think this is something that they want to hear directly from CalPERS and not from us. Because a lot of our school districts have the understanding that as long as they take the tentative agreement with the unions to board and that's board approved, that they don't need to take the salary schedules to board. And I just kind of wanted to have them hear it from you that even though the agreement with the union goes to board, stating that there's a percentage increase on the salary schedule, that they still need to take those pay schedules to board with the actual rates for approval.
Thanks, Erica, for that question. So yes, according to the California Code of Regulation 570.5, one of those requirement that's within there is the publicly available pay schedule must be approved by the governing body. So just utilizing an MOU that denotes an increase, that does not provide for the publicly available pay schedule. That does not meet that criteria. So Ken, I was going to offer up if maybe you wanted to add anything additional to that. What I would do, Erica, definitely is point your schools to that California Code of Regulation 570.5, because there is, at least I'm pretty sure it's 570.5, right, Ken?
Yes, it is.
Yeah.
So
and I would definitely point them to that criteria, because the publicly available pay schedule needs to meet all of that criteria. So there's a list of,
I think there's 8 requirements.
Exactly. I was going to say 8 or 9
so
requirements.
I do send them the circular letter, but sometimes they still question it. So I just wanted them to hear it from you directly.
Yeah, definitely. And definitely point back to that circular letter. We covered a lot of questions in that one. And I believe even one of them is somewhat tied to, hey, if I have it approved on this other, if I have it approved in an MOU, is it okay? And the answer is no, it's not. Oftentimes what we will see public agencies do, and the schools could certainly copy this, is they will bring an MOU forward for adoption. And then there's an accompanying agenda item that is attached to it that says, okay, and with the adoption of this MOU, here is the established pay schedules related to those increases you just approved in the MOU. So that's kind of boom, boom, one happens right after the other. So it ensures that publicly available pay schedule is compliant. Beyond that, Ken, did you have anything you wanted to add?
Yeah, so we've actually had this come in a few times with our MOU review team. So number one, Renee referenced CCR 570.5. So, and then you also spoke to the 8 requirements. So the 8th requirement does not reference another document in lieu of disclosing the pay rate.
Mm-hmm.
So, I mean, that's very specific as far as you can't just use an MOU. It has to be a publicly available pay schedule that, doesn't reference another document. It goes vice versa too. The MOU can't, just reference another document. But we've had this a few times working with some school districts, and they will reach out to our MOU review team. And we will, at least respond with an email citing the California Code of Regulations. And that seemed to help in the process. And sometimes the people that are questioning it can be CC'd on the email as well. And then we can just take care of it all at once. So if it really becomes something that is going to keep your employer from being in compliance with the government code and the California Code of Regulations, reach out to our MOU review team.
Thank you, Renee and Ken.
Okay, it doesn't look like we have any more hands raised. Hector?
Yes, I never got to answer ask my question.
Excellent, thank you.
So this is fairly new in our district with the out salary schedule. Does the members have any kind of benefit towards their retirement from outside their schedules, or?
So if off salary schedule, I'll start this and then I believe it was Kevin Fine was the one that spoke to off salary schedule pay. But the one item I would say is, first of all, OSSP can be paid by schools at any time. So this has nothing to do with whether or not it's paid or not paid, but there is a set of criteria, and it's related to 571 for it's related to 571 about whether or not it can be reportable for classic members. OSSP is not reportable for PEPRA members. So, and I know, right now our school population is it's a little over 50%. I want to say it's 50, somewhere between 55 and 60% PEPRA appointments. So, so first of all, the individual would have to be classic, and then it does need to meet that criteria. And if it meets the criteria that was discussed earlier in the training that was provided, then it must be reported to us. Again, classic members only.
Okay, Ramona. Go ahead.
This is a question for Carlos. It is piggybacking on a question that Erica had asked on the RSC transactions and the ability to report for the current month also. If I'm spanning over a period, say I'm paying something that's in the month of November and it covers the months of August through November, I can span including those prior dates plus the current month's date in one record. It doesn't have to be one for the prior months and then one for the current month.
Yes, that is correct. With this new enhancement, will allow you to do the past through the current. You still can't do any future dates, but you can do through your current.
That, at least there's that. All right. Thank you, Carlos.
Yeah, thank you.
Okay, that looks like that's all the questions. Oh, yeah, looks like that's all the questions. Anybody else? Okay, Renee, I think that's our meeting for today.
Yes, again, I want to let everybody know we've had, I think I've seen the number jump up right around 450 people attending today. And that's just fantastic. We often don't even see that number only in some of our sessions at Ed Forum. So, and that is our one, banner event a year. So to have 450 signed on, and I'm betting some of you are even in a room and displaying this with multiple people in the room watching. So we are thrilled to have all of you participate in this training. Please let us know what you thought of the training. I know we do send out a survey afterwards. And so we would love to hear your feedback about what you thought of this. If you do find it to be worthwhile, then we would happily do this on an annual basis. We think about now is a good time of year because it's kind of with the new school year starting and providing you with this new, just kind of arming you with this new education and make sure you're ready to go to be able to do the work that you need to do. And so with that, I will say thank you so much for joining us. Again, please do the survey when it's sent to you, and we'll talk to you again soon.
All right, thank you.